On today's Amateur Market Minute, Microsoft has announced to lay off over 4,800 employees because some parts of its business is failing, and Microsoft is basically trying to stop the bleeding. And Texas has finally made the move to challenge Wall Street and New York City to become the financial capital of the world. But the question is, will Texas be able to dethrone Wall Street and New York City? And we also have a South Korean company, a semiconductor company, coming out of South Korea to challenge Micron. And this could be a great investment opportunity for institutional and retail investors as well. And a lot more that we're going to be covering in today's video. Let us get into it by starting with our first story. Microsoft has announced that they'll be laying off over 4,800 employees from the Xbox division, the gaming division. So if you're a gamer, this may affect you some. But if you're an investor, Microsoft, they're saying it's not because of AI, it's to make the gaming or the Xbox department a lot more efficient. But let us take a look at this reporting explaining what is going on over at Microsoft.
Meantime, Microsoft announcing some layoffs this morning, including some hefty cuts in gaming. Our Kate Rooney's on that story this morning. Morning, Kate.
Hey, Carl, good morning. So Microsoft is eliminating about 4,800 jobs. That is roughly 2% of its global workforce. Biggest impact here appears to be on its Xbox gaming division, where it's cutting about 20% of staff. So this isn't Microsoft's first round of cuts, we should say. The company has been reshaping its workforce over the past few years as it shifts all of its resources, or most of them, towards its biggest priority at this point, which is, of course, artificial intelligence. Microsoft said this morning in a memo that its 4 game studios are going to become independent under new management as part of this broader restructuring. The CEO of Xbox writing to staff that this is part of a years-long restructuring. The gaming unit has seen revenue shrink in recent years, while Azure and the cloud business has really become the crown jewel for investors. The Microsoft layoffs do also fit into this broader Silicon Valley trend we're seeing. Amazon, you have Meta, Google, all also restructuring their workforces as they race to build AI products and then fund tens of billions of dollars in terms of the AI infrastructure build out. But Microsoft saying this morning in that memo to employees that the roles being eliminated today are not being replaced by AI. They say it's about trying to realign resources and talent as the technology and customer needs start to change.
Microsoft has announced to cut over 20%, over 4,800 people from its Xbox department, from its gaming department, which is about 2% of its entire workforce. I believe out of those 4,800, I believe 3,200 is actually from the Xbox division. And the question is, what is really behind these cuts? And if we examine this article right here, it explains that while Microsoft recorded accelerating growth in cloud services and LinkedIn in recent quarters, it's lagging in other areas such as Windows operating systems licenses, Surface devices, and the Xbox gaming unit, where revenue has been shrinking. And it continues to say that Microsoft has been the worst performer among mega cap tech stocks so far in 2026, falling 19% as of Friday's close, as investors fear that generative AI models might displace wide swaths of enterprise software, while Microsoft's own AI models and services have yet to become big hits. So it is clear as to why Microsoft is making these cuts, because for one, the Xbox division, the gaming division, has been declining in revenue, and Microsoft and basically every other company out there, they've been investing heavily in AI. And if there are parts of your business that are lagging, then you have to make some cuts somewhere, which is why I think Microsoft has made those cuts at their Xbox division. And now let us move on to our next story. Texas has officially begun trading on the Texas Stock Exchange in a direct challenge to New York and the New York Stock Exchange. And could we see Texas dethroning Wall Street to become the financial capital of the world? Now, let us talk about exactly what is going on, starting with this video explaining what happened this week.
Big day for Dallas as it tries to make itself a financial hub. The Texas Stock Exchange started trading today. It's part of a greater Y'all Street movement that's arrived in North Texas. And Jason Wheeler has so much more on this big moment here in North Texas. Jason.
Yeah, Izzy, we'll start with some familiar names here. NASDAQ and the New York Stock Exchange are the biggest stock exchanges in the world. Combined, their listed companies are worth $68 trillion. But in 2024, a startup outfit calling itself the Texas Stock Exchange, or TXI, boldly announced it was going to take on those giants. And now, 2 summers later, TXI just started test trading and is scheduled to begin fully live trading in the weeks ahead. That alone is a huge deal, but add to it that since TXI took on the 2 big guys from New York, both of them have opened their own offshoot exchanges in Texas to compete.
It is clear what's happening right here. Texas is trying to break the monopoly on Wall Street, because when a company wants to raise capital, wants to go public, they go on the NASDAQ or the New York Stock Exchange. And we know a lot of companies, they've been moving to Texas over the past couple of years. So this is a great opportunity for Texas to try to rival these giants. But the question is, will Texas be successful? Because we know ever since Texas announced to start the Texas Stock Exchange, the New York Stock Exchange and the NASDAQ went to Texas to open up their own offshoot. And here we have this article that gives us a little highlight explaining what's going on. Texas is taking its biggest step yet toward becoming a financial powerhouse. And the exchange, the Texas Exchange, is opening with a phased rollout, beginning with its members trading test stocks. Over the coming months, thousands of stocks and other equities are expected to become available, with ETFs anticipated as early as this fall. Corporate listings are expected later this year, while the first initial public offerings are projected for early 2027. So as you can see, they basically just started. They don't really have that much going on in terms of a full operation. They're rolling this out in phases, so we don't know if this is going to be successful as of yet, but this can point us to Texas's ambition, because according to the governor's office, Texas has an estimated $2.9 trillion economy, the 8th largest in the world if it were its own country. Supporters say the new exchange could help attract more financial jobs, businesses, and investment to the state. While Monday's opening is largely behind the scenes, officials say the exchange is expected to expand steadily over the next coming couple of months. So right now, the New York Stock Exchange is still king. Wall Street is still king. But at the end of the day, do not write off Texas, because what they're doing, they're essentially attempting to rival Wall Street. And considering that Texas is only growing, we have more and more companies moving there. The economy is growing pretty fast. So maybe in no time, we'll see Texas actually rivaling New York and Wall Street. Let us talk about SK Hynix, which is a company coming out of South Korea, a behemoth of a semiconductor company that's heavily involved in the AI space, and they're preparing for a massive US IPO. And this company is important because, for one, this is one of Micron's largest competitors, and 2, this is an important partner for NVIDIA as well, because they provide critical technologies for NVIDIA. So understanding these 2 different things, it is clear that this is a massive, important opportunity for investors. But here I have this video explaining a little bit about this company and what this IPO means.
Yeah, so this is a company, to your point, nominally at $28 billion, would be the 3rd largest IPO ever on any exchange. So behind SpaceX, behind Saudi Aramco, which is pretty mind-boggling, to be completely honest. The thing to keep in mind is, so this is an ADR IPO. So basically, they're selling shares for the first time here in the US. They will maintain a home listing on the other side of the world in South Korea. Each ADR represents 1/10 of one common share. Why does that all matter? A, as you mentioned, a $28 billion offering is very large. B, this is a company worth more than $1 trillion. And C, this opens up everyone on Wall Street, everyone in the US, to now actually trade SK Hynix on New York hours, on US hours, and be able to cater to not only retail investors, but institutional investors. We already saw Bailey Gifford, Coatue, and Situational Awareness Partners indicating they want to buy as much as $7 billion of this deal. So big numbers, but it's also a right time for the company.
As mentioned before, SK Hynix is a South Korean company, and traditionally, U.S. investors haven't really been able to invest in this company. So right now, this is a massive opportunity for both institutional investors and retail investors as well. And here I have this article explaining a little bit more about this company and the IPO in the U.S. U.S. investors will soon get access to SK Hynix, another memory maker riding the AI boom. South Korean memory chip maker SK Hynix, rival Samsung and US-based Micron, is planning to sell nearly 17.8 million shares in a US IPO. The company said on Monday, should its shares sell well, the company could raise as much as $28 billion. So as you can see, this is a massive opportunity. But what about its numbers? Like Micron, which is SK Hynix's biggest competitor, or you can say SK Hynix is Micron's biggest competitor, but like Micron, SK Hynix is riding an AI-fueled boom, credited to AI in both sales and stock price. Its first quarter revenues were up nearly 200% over the same quarter last year, it said, and its stock is up about 260% so far this year. And Wall Street is looking for another NVIDIA, and memory chip makers are among the closest options they have. Micron, the closest US comparison, has shot up nearly 700% over the past year to a more than $1 trillion valuation, fueled by record AI-driven memory demand and revenue. And as I mentioned before, SK Hynix and NVIDIA, they have an extensive partnership where NVIDIA and SK Hynix announced multi-year technology partnership for next generation memory aligned to NVIDIA's AI infrastructure roadmap. So as you can see, this is a great opportunity where Wall Street is welcoming this opportunity, and I also think retail investors may benefit from this as well.